everyone, welcome to Perkins Smyth's Weekly Property Tips. I'm Mark Madden, and joining us is Jason Werrett, the Sales Manager and obviously Business Partner, Co-Director, man of many talents. Thanks for joining us, mate. It's been a couple of months since you've been on.
Yep.
And we've got you on today to talk about, I guess, an update on the sales side of things. We had Nat last week or the week before.
Yep.
So I guess we've just come out of the summer quarter. How do we sort of see things? What are you thinking?
Yeah, I think Tamworth still fared really well.
Yeah.
I think it's still a proven stability for the regional areas. Cities like us, a pretty good hub for the area. So
still affordable.
Yeah, that's right. Affordability is still there. The prices still seem to be relatively stable.
Yep.
Obviously, it's changing. But price-wise, we haven't really seen too much of a change at this stage. So, unlike some other, coastal towns where they're driven purely by, metro relocations and retirees, that sort of thing. So,
yeah, it's mentioned that at all. Yeah, I think Tamworth got mentioned as certainly it was Tamworth and Wagga Wagga as two of the top areas to buy investment property as well.
Yeah,
which is quite a good article.
Yeah, it is a good article, and it reflects back to the industries that support the towns.
Yep.
So the Wagga's very similar. We've just got multi-industries, not just relying on one, one form of infrastructure and employment. So that's good, and the town expansion. Obviously, our local councils in both cities are planning to expand the town, so they're investing into redevelopments and that sort of stuff too.
Yeah, which is awesome.
Yeah.
I'll put that article down below in the comments as well for you. Interest rates. Yeah, that's my comment as well. Obviously, yes, we're riding on the back of a couple of increases. Look, there's potentially another one, too. Who knows?
Yeah, look, I mean, we can't, we're not going to be able to gauge that. Obviously, they'll do what they want, and one week to the next, what we read and hear can change anyway. So, but I think, we always anticipated rates to lift. They were never going to stay where they were.
No.
It's definitely affecting probably the volume a little bit that we've seen lately.
Yep.
Maybe a bit more investment property coming onto the market.
A few trades.
Obviously, it's just tightened. It's got a little bit tighter for some portfolios or some investors out there and owner-occupiers. That may have bought in that rising market at a low rate, and affordability is probably, with everything else being so expensive now, cost of living so high, they're probably just feeling it's safer to release the property and move on to something a little bit more affordable to their lifestyle. So there's a little bit of that going on, but I wouldn't say that it's dominating the market by any means out there. So we're not seeing a flood of homes on the market, which we don't want to see.
No.
So I think, provided we can not see too many more rate rises, I don't expect that to change.
Yeah, exactly right. It's certainly not doom and gloom, but you certainly see some trade-ins where people have maybe owned an investment property for a good sort of 10 years and they bought it well, and now they're like, okay, we've got a bit of money here, let's use it. So,
that's right.
And obviously, crystal ball, mate, we'll hold you to this. Outlook. So even next quarter, obviously over the next 6 months for the end of the year, real estate in regional is obviously seasonal, so we're really in the quiet, what would normally be our quiet section, and the colder months that tend to, people hold off waiting for their gardens to flower. So what do you see?
Look, I mean, you're right. Typically coming into that quarter is usually a little bit slower volume of property coming on. So we've seen a little bit of a pickup in that volume, but coming from an extremely low volume as well. So we're not breaking trends by any means. It's picked up a little bit. My feeling is that it'll probably just be a standard market moving forward. I think the lower volume of properties coming on, typical of this time of season and in the year, will reflect the amount of buyers out there as well. So it should be exactly what we've seen. It should just be a steady flow. We shouldn't really see a price change so much. I'd say it'll just be a standard take-up. Your days on market's a little bit more, so that fear of missing out we spoke about before has disappeared for buyers. So it's more equal now of properties available to people purchasing.
I think it's probably still evident maybe in that entry level where you're probably 350 to probably maybe 6. That's still pretty red hot, that little bracket. and obviously that's investor first home buyer, second home buyer. So
Yeah.
I think that might still kick, but yeah, your higher end stuff certainly is starting to see that really starting to push out. But that's the market we work in.
Yeah, that's right, and it's never going to be
No.
steady flow. It's otherwise it wouldn't be a good investment.
No,
so,
exactly.
It's always going to fluctuate in smaller amounts, and I think that's all we predict is that if we do see any changes, they'll only be minimal changes for the Tamworth market and surrounding areas. You know, the talk in the background is with rates that potentially next year we'll get through this one, which is probably our correction period with inflation. So if that can, you know, if we can sort of steady that up, and then talk is next year it'll probably ease back a little bit, so rates will pull back a little bit, which will just give people a little bit extra confidence to, if they're holding off, to get back into property again. And I think that'll support prices for next year too. So we could even see just a further, you know, the start of a normal, typical growth trend there.
Back into it again.
Yeah.
All right. Thanks for joining us again, mate. Obviously, if you're watching on YouTube, just hit the little bell for the next video that we put out. If you're watching on the newsletter, thanks again for watching. As I said, we'll put all this in text below and the link to that article we mentioned earlier. Thanks, Chase, for tuning in.
Thank you. Appreciate the opportunity.
And we'll see you next week.
So.